following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Let's talk futures. Joining me live from somewhere in the Chicagoland area, Jason Appel, Elliott Wave Trader. Jason, how are you?
I'm doing great. How are you, Jim?
Pretty good. It's good to see you again, man. How's the weather in my old stomping grounds?
It's very cold. This is the first time my wife has ever lived in cold weather, and she's getting acclimated nicely. It's definitely a throwback for me to be in this level of cold. Minus temperatures are very cold.
Yeah, no, I remember, man. I mean, when I lived in River Forest, I would, we'd have to be in the office early, right? Because we were doing the brokerage as well.
Yeah.
And I would have to warm up that car, and you'd see it. It had the temperature gauge there. It's like -6. Like, oh gosh,
Yeah.
brutal. But refresh my memory. Where was your wife from?
She's from Los Angeles originally.
Oh, well, perfect. It's like perfect weather in LA all the time.
Yeah.
Oh my God. Anyway, awesome, man. So, in any event, it's been a while since you've been on. You're with Elliott Wave Trader, and tell us a little bit about what that means and what you're, just let's go back and refresh people's memory about the idea there.
Great. So at Elliott Wave Trader, we track a variety of markets, really across all of our different services. We track everything. The primary focus, I would say, of our main market service is on the equity indexes with a particular focus on the S&P 500. But we have, very deep coverage into the energy markets, into currencies. I focus particularly on cryptocurrencies and some of the agricultural commodities, as well as metals and miners. A lot of our members in particular are more stock and ETF traders who trade securities. Myself, I'm more of a futures trader, so I feel right at home here, certainly.
Well, it's funny. It's funny you mentioned that because, so I grew up in the old Park River Forest area, right? I was born there. I grew up there. I spent most of my life there. You're there now. And, that old Park River Forest area back in the 80s and 90s and even up till through today is the home of a lot of futures traders, right? We'd get on the L train or we'd drive down to the Board of Trade or the Merc, come back. And it was a nest. A nest of hornets. We were all together there, and it's still the same way.
Yeah, indeed. I started my career on the trading floor at Chicago Board of Trade right out of high school, actually, working on the floor there. Yeah.
What pit were you in?
I was mostly in the financial room. I started working around the bond pit, and then primarily moved over to the Dow Jones pit and was there for a few years.
Yeah. Okay, awesome, man, awesome. Because I noticed right now, let's talk about your chart you have on the screen right here. You have a live cattle futures chart, man. This is old school. I love it.
Yeah. So one of the things I think that this is true of all technical analysis here, and no different for doing Elliott Wave analysis, is that you want to go where the good setups are, if we're going to remain relatively agnostic about what the news is and things of that sort, and instead are just going to focus on where do we find good actionable setups, high probability, good risk to reward. So one of the ones recently that one of my colleagues in we call it the MMA room. It's the metals, mining, and agriculture. So we have a service that focuses on the variety of charts across metals all the way to agriculture. Just generally like a physical commodities service. But one of my colleagues pointed out this setup that I wanted to bring on today because I thought it was particularly good, and it really shows how we how we look at the market in terms of having an overall context. So think of that as a dynamic roadmap for where a particular market is going. And then inside of that, depending on what sort of time frame you trade on, if you're a day trader, if you're a swing trader, you may look to find particular opportunities in which to trade. So for example, when we are dealing with a trending setup in Elliott Wave, we're going to identify that typically as a 5-wave sort of move. And so we are looking here, we're starting a larger trend since, can't see this on my chart here. I'm gonna have to move this over a little bit. What low is this here? I can't actually see the dates here that are coming up. But we have a low here at this point at 162. I can't exactly see where that is at this time in terms of.
Well, hang on a second. Let me put my glasses on. I might be able to help. Go put your cursor back.
There we go. Okay.
You got it?
Yeah, I had the zoom window in the way there, but yes. Okay. Since December of last year,
yeah.
We bottomed in what is called, an intermediate wave 4, and that means that we're setting up this larger move here for the intermediate wave 5. So we're looking for a bigger move, let's say just generally, to fill this in, and we are looking for that to be a 5-wave structure from this December 2023 low up until however long it's going to take to get to this intermediate 5 general target region.
So Jason, quick question: Will the 5s always follow a 4 or not necessarily?
Yeah, they will. I mean, these go sequentially. So we're dealing with 1, 2, 3, 4, 5.
Okay.
And internally, those might have 1, 2, 3, 4, 5s or ABCs, depending on whether or not we're dealing with something called an impulse or a diagonal. Impulses tend to be a little bit more directionally imbalanced, and you tend the hallmark of an impulse is you tend to see a very big third wave that doesn't have overlap. Here, as you can see, we're in a third wave and we have a lot of overlap, where price breaks out, comes back into the range, breaks out again, and so on and so forth. And so, this is telling us here that this type of structure is a diagonal. When we see that type of structure, we count the subwaves of our major 1, 2, 3, 4, 5 as ABC types of moves. So you can see, for example, in R3, we're looking for an ABC structure here. But in terms of how we would use this dynamically, we have a roadmap. By no means do we look at this and say, we don't want to become overly rigid and say, well, the market has to follow my roadmap. Obviously, yeah. We look at this as an abstraction of the market, but that one that gives us some predictive advantage. And so, particularly in a market like this, we know that a C wave, for example, that we're tracking since the mid-November low, that is more often than not going to take on a 5-wave impulsive structure. And so what we're looking for then is some form of activity in the subwaves, particularly in the 1 and 2, to give us the idea that we have a long setup in here. So for example, this type of move here, I think for most technical analysis is just, we would say, this is a rally. We could look at this in terms of, how high volume is it? Is it, breaking outside of any type of ATRs? But in our view of the market in terms of Elliott Wave, this is significant as a micro impulse that's telling us a bigger impulse is starting. And so after we see that, we're going to label that as a wave 1, we would mark out support, a standard support zone here that we would identify as a buying opportunity for a wave 2 retrace. And that's going to be between our 0.382 and 0.618. Now, obviously, for everyone who's watching this now, this is a lot to memorize, but this is something that we do loads and loads of education on in Elliott Wave Trader. And when we're posting live analysis to our room, we talk about what these setups are and what this region is where we'd look to be a participant. So this is an area here where we would look to be buying around this 50% retrace here. And you would be, in the most pure sense, you would be looking to set a stop below the November low. And once price goes in your direction, I mean, different traders are going to have different means of risk managing it, but we can get ourselves some pretty accurate targets for each of the individual subwaves of this move after we have our 1, 2 in place. So in general, we're going to be looking for our third wave to come up here into this 1.382 to 1.618 extension zone. So, for example, if you're buying in this region and you're going to set a stop near the low that preceded that wave one, you're really getting pretty phenomenal risk to reward to trade this upside here. And as price moves in your direction, given that we're doing a fractal form of analysis, you can move your stops up. So for example, this is actually a trade that, that I have done here. My stop at this point, I need to update this today, but my stop at this point is no lower than 186.85. And even at this point, I think it warrants rolling the stop up higher. And the reason being here that inside of our third wave, we have another 5-wave structure that's developing, and this should be a 1 and 2 within that structure. So at this point, we should see no lower once again than that wave 2. And so this is something here where if you're disciplined and you're waiting for a good entry in this 50% to 618 zone here, the stop is in profit. And this is a pretty sizable move up here. I think cattle, I don't trade this one too frequently, but I think this one's $400 per one lot per dollar. So, if you get a few of these on here, it turns into a pretty, pretty sizable.
So you could it almost seems like you could move your stop all the way up to that 0.618 fib at 190 spot 52. And I know it'd be cutting it tight, but that would be, according to the next wave structure, you might be okay.
What I would be doing, and we'll adjust this, when we're done with this video here. So one of the key aspects that we look at when we have an Elliott Wave impulse is once we break out above this 618 to 764 zone, that tells us that we either are in the heart of a third wave, and that's our strongest part of each individual segment of the move. So for example, we're in this parentheses Roman numeral 3, and we're identifying being within that 3 of 3. At this point, we really need to be holding the 618. But one thing that I've observed over time, and this is particularly salient for futures trading, is if you become overly rigid about placing a stop at a point where you really don't want to see price below, oftentimes price comes through, finds some liquidity right here, and then zooms up in the other direction. And so one thing I'm cautious about, I will typically place alerts for myself around that 618, but place a hard stop a bit below it. So for example, we have this region here, which is, for my market profile days, we would call this something like a thin print here, where we only trade these prices in a single time here. I think they call this something like a fair value gap now in current verbiage. But I would be setting my stop now probably below this fair value gap, with the idea that that's around the 618. Price could tick into that, run some stops, and then reverse in the other direction here. So I would be moving my stop to around that at this point, 190 with an alert around 190.50. If we make a sustained break below that, it's likely that we're going to come down and take out that stop there.
Yeah. So what we would say is we don't want to be wicked out. In other words, it gets stopped out on a wick and then it goes our way anyway. And then now we're all upset and, it's not good.
Absolutely. And so this is something in particular here in this instance, right, where, we may get a wick into that zone, but what we're looking for is 193.45, and that's our 1.0 extension. That's a typical region that we see the third of a third wave reach. Over time, our methodology has shown us here, not just, to count Elliott waves, but particularly to track where our waves 3, 4, and 5 may target, which is quite useful. By the same token, we don't want to constrain this from running further. So once we get into this range, I would take some partial profits here, but then would roll up stops more tightly to see if this, really expands to the upside, which is something that we often see in physical commodities, where in a third wave or a fifth wave, they can really take off to some pretty extreme extensions, and you can have some low risk and really high reward opportunities in
so
that.
Let me ask you this: what happens to the pattern What happens to the Elliott, the 5 point pattern if something really bad happens? Let's just say we had mad cow disease and this thing just, falls to zero, we spikes down for a while. What happens to the count? Do you start over?
We don't start over, but by the same token, we need to respond dynamically. And I think for a lot of our newer members, they would ask about this. That they're coming from the world of J.P. Morgan is setting a price target of 6,200 on the S&P for 2025. And it's really difficult to say at what point that's wrong. I think as a trader, this is one of the beauties of Elliott Wave, is that we get a point at which we say this thesis no longer makes sense, and then we have to dynamically go and adjust the thesis. And we don't do that to say, well, my chart always shows the right answer. Instead, we do it to update our roadmap to say, okay, how I was looking at this in terms of a roadmap no longer works. I want to come back to have a dynamic roadmap, which is accurately describing the context that we're in. So, for this example here, if I'm to zoom back out and say, hey, we're looking for this big C wave up off of the November low. And let's say today or this weekend, mad cow happens and cattle crashes back down to the September low or something like that.
Yeah.
At that point, we might do one of two things. First off, this idea, if we break below the September low, and certainly if we break below the April low, the idea that the wave 2 low is not working anymore at that point. And so, we need to adjust all this. If we're still holding above the December low, we might consider the idea, we'd probably consider one of two things. And this is where, I'm showing a primary count here, but when we're doing this, we always want to maintain a reasonable alternative count at the same time to say, hey, what else makes sense here if I'm wrong? Mm-hmm. And we can look at another chart. I know you had the NASDAQ up before, and we can take a look at that as a good example of this. But for example, if I'm looking at this as a 1-2 type of setup here, and looking for a 3, 4, and 5. Let's get those at the right degree. If we come back down to this low, we might assign this as a wider wave 2, and say, hey, we had an A wave and a B wave, and we got a Y wave 2. If we come down and break the December 2023 low, at that point, we might say, well, this whole thing was a correction off of the September 2023 high. We came up to make a double top, but really did so in a corrective pattern. And really, we're looking at this as a wider corrective type of move. And we understand then we would zoom back out to a bigger degree here and say, well, where's our support for this bigger wave 4? And so we know that this whole region here, this whole set of fibs, of Fibonacci levels, is our support for our wave 4. So if we came back down into this zone, that's reasonable as a bigger fourth wave. And then we would get our bearings to say, hey, do we want to trade this back to the upside? Well, we want to see some evidence that a bigger parentheses or intermediate 5 is starting to finish off this bigger C wave here.
Got it. Okay, that makes sense. So let me ask you this though. So we were talking about cases, we're looking at waves in a bullish format. Mm-hmm. Let's just pick, I don't know, Japanese yen as an example. Do the wave patterns would exist in a bearish market?
Yeah, sure. So that's 6J is the futures on that, right?
You got it. You got it.
So for example here, I've looked at this chart at some point clearly.
Yeah. I have the same problem. I have the same problem. I haven't looked at a chart in a while, and they have these lines, and I'm like, what are these from? Are these important?
Right. Okay. So if I look at the entire history of this, and again, this is just the futures here, but I'll mark out a couple of key levels. Obviously, we have our high here in 2011, and I would say this type of move to the downside here from the 2011 low to the 2011 high to the June 2015 low. I am going to call that, I think this makes sense as a 5-wave type of move, which tells us when we have a 5-wave move in Elliott Wave, we're going to look at that as typically that's going to be viewed as an initiation move. So when we have a 5-wave move, we can either call that an A wave, or that can be called a wave 1 at some bigger degree. I'm going to call this a it's hard to say with a currency. I mean, we don't imagine that a currency is going to zero.
No.
But although I guess if you're talking to some crypto people that, they may look at that in terms of how, fiats are going. But essentially, I would be viewing this as we have 5 down as an initiation move that I would call as an A wave. And our corrective bounce here is a B wave. And then what's next in our sequence is a C wave. Now, we know our characteristics of a C wave are to be a 5-wave move. And so I would label the subwaves like so, where we're probably in the latter stages of a wave 3 here. And I'm just marking this, I'm just eyeballing this here. But what we would do more rigorously is we would measure the wave 1 and extend this measurement down from the wave 2. And we have enough we have far enough extension for this reasonably to be a wave 3. But when I count subwaves in here, it doesn't yet look like the wave 3 is necessarily done, because this looks like a 1, 2, 3, 4, and possibly we could have 5 down within this third, but maybe looking for one more low here. So this is an instance where if I'm trading yen, I'm not really looking to trade to the downside very much at this point, because within our bigger context here, let's say this regular, this number 3 here off of the 2020 high, this move is pretty mature. So most of the move is down, is complete. Now, it doesn't mean we can't see some extensions downward and maybe one more low here, but this is not an instance here where I'm saying, well, I'm really eager to trade this to the downside. This is sort of my read on this in particular. Everybody has a different way that they look at actually taking risk within an Elliott Wave context. Personally, I'm much more comfortable taking risk when I have time frame alignment, let's say, at the beginning of a move. So I'm much more interested to trade after we have a 1-2 and then maybe another 1-2. I'm going to start to look to take exposure in this region for a big move down. After the waves 4s and 5s of a particular move are playing out, I become a little bit less interested in playing. So, for example, if we come over the equity markets, I have been very cautious of doing any type of swing trading in the equities, even since the October low of last year. And granted, we've had such a massive move up in that time, and I've participated in a lot of it, but I've been much more cautious to take profits along the way. Just given where I see us in a larger degree context.
So Jason, we have time for another market. And I'm gonna throw 2 out. You pick NASDAQ or the Bitcoin.
Let's look at Bitcoin. I love Bitcoin, and it's something that I'm really track quite actively here. Give me a second, and I'll pull up my my bigger Bitcoin chart here.
Yep, take your time.
Okay, I'm going to pull up a daily chart, and we're going to look at the action from we can look at this from the, let's look at this from the 2022 low. Okay. So I have a couple of different views of this that need to get updated. I'm not entirely sure anymore that this bottom in November 2022 was a wave 4. It might be something less than that, where we're going up in a much bigger move. But in any case, was looking for a low around this region here. We were looking for a low around 15 to 25K, and we came down all the way to the lower end of that region. And then you can see here, out of the 2022 low, we got a 5-wave move to the upside here, like so. And that tells us we have an initiation move. We've likely completed this corrective cycle from the 2021 highs. And at that point, we get a flat type of correction into the September low, and then very bullish to the upside here. So, once we bottomed at 24, around 25K here, at that point, we're looking up to 65 to 76K as our target for the wave 3.
So Jason, real quick, go back to the 1.
Yeah.
That's after the 5-point initiation wave.
Yeah.
That you don't know that's the 1 right away, right? You need a little bit of retracement before you could say, okay, this is the 1.
Exactly, because one of the things we don't know as it's developing in real time, I think I can use this tool here, is once we get this, we can say, well, we have 5 waves in place, but there's nothing to rule out just getting a little retrace and then continuing here to the upside, at which point we need to start again, dynamically altering the roadmap, where we can say, instead of, is this a 1, 2, 3, 4, 5 for a bigger wave 1, we might look and say, is this a series of nested 1, 2s where this is a 1, 2 and our 3, 4 is a smaller degree 1, 2 and our 4, 5 is another 1, 2. But in any case, when we see that type of activity, we are going to be tracking at a larger degree the all-time highs, and that gives us the idea, given that we're heading up in some form of impulsive fashion, that we ought to be looking for pullbacks to buy, and our bias very much should be to the long side. Should be looking at reasonable retracements as opportunities to play forever higher until we fill out a full 5-wave structure off of this 2022 low. So in terms of where we are now, I'm looking for a top in Bitcoin, and I have been, I think since around the 2020 or 2018 low, we've been talking about 125 to 140K Bitcoin as a significant top. I no longer am seeing that as such a major top here, at such a larger degree. But in terms of this move off of the 2022 low, I'm looking for a significant top to develop, ideally around 125 to 140, maybe 150. I'm not going to rule out much more direct extension higher, but at that point, I would be looking for a significant retracement, at least, of the move off of the 2022 low, where we could come back into this 50K zone and retest the August low, and possibly even retest these breakouts from April 2023 and July 2023.
Awesome, man. All right. Well, I appreciate that. I'm glad you indulged me there. One of these days, me and you are going to have a conversation on what the heck Bitcoin really is anyway, but we don't have time right now. How do people, what's the best way to people to find you, to reach out to you?
Yeah, I'm going to pull up our page here. It's ElliottWaveTrader.net here. And this is our main site. If you come to our page, this is what you'll find. And I think we have free trials for our subscriptions here, and you can decide to subscribe to a cryptocurrency service or one that's looking at the equity indexes and everything.
Could you drag that in front of your chart?
Yes.
Yeah, because we're just still seeing your chart. Well, it'd be okay. Yeah.
Let me see here if I can. I'll take down the chart here.
If not, I could put it in the chat. There we go. No.
Sorry.
Sometimes I just drag my browser there and boom, it's there. ElliottWaveTrader.net, folks.
Here we go. Is that visible now?
Yeah, we got the chart still, but that's okay. That's okay.
Okay.
It's TradingView. That's fine. ElliottWaveTrader.net, everybody. Jason, appreciate you being here with us today for sure. Looking forward to talking to you again. And I do want to say happy holidays.
Thank you so much, Jim. Happy holidays to you as well, and look forward to being back with you.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.